Well, good afternoon, everybody. I am very excited for this week's guest, who's a vice president of industrial for a large portfolio based in Canada, and they're aggressively looking to expand into the industrial space even further. They own a number of properties, and they're also in the development space. So we're going to talk about industrial strategy, why they're pushing industrial as much as they are, why they're so bullish on it, perhaps some of the pitfalls that we might see in the market, and really just get a good understanding from their level of owning a lot of industrial real estate, where they see the market headed. So with that, Jamie, thanks so much for joining me on the call.
Thanks, Chad. Appreciate the opportunity to speak to you about One Properties, our portfolio, and some of the things that we're doing in the industrial space in Toronto and across Canada.
And like we were talking about before we jumped on this call, I know of one quite well, actually, with where they got started, the two of the guys that founded it, where it's evolved to today. But for those that don't have my understanding of it, could you give some background on one, maybe some history of it, and then size of the portfolio and where you guys currently stand today?
Absolutely. So one was started in 1987 and in Edmonton, and you are located in Edmonton. I'm located in Toronto. So you might even have a better understanding of the history and the early days of what one used to be in WAM, Western Asset Management. And it's grown over the years, and in around 2012 rebranded to One Properties. I've joined One just before the COVID-19 pandemic in January 2020, and so I've been here for about 3 years, and we've got a fully integrated asset management, all the way through fully integrated portfolio management program from acquisition through to property management. We operate in Edmonton, Calgary, and Toronto. We've got over 48 million of square feet developed since 1987, and currently have just under 7 billion square feet in assets under management. I oversee our Toronto industrial program and portfolio. That consists of approximately 5 million square feet of mostly big box industrial warehousing, and we have approximately 2.5 million square feet of industrial product that's in the development pipeline right now. So certainly an exciting time for that asset class and the Greater Toronto area. We're looking at expansion in other areas of the East, and we are actively growing right now, and we're absolutely sort of excited for the future in this asset class in our markets that we operate in.
Yeah, and I want to dive into that further and just see why you guys are so bullish on industrial and what you expect going forward, whether we have some temporary hiccups with some perhaps downward economic pressure to what the long-term horizon is. So I want to jump into that. But just curious, what was your background before you joined One 3 years ago?
Yeah, so I've operated for and worked in approximately like 15-year career thus far for public and private, pension plans, REITs, asset managers, always on the landlord side. So I've always operated through on what we call the buy side of the business, not the sell side, and so I've always kind of focused on the commercial side of the business. So office, retail, industrial has been kind of my bailiwick. And so I've worked for a number of different companies in my career. I made the move from my initial start at Morguard Investments, which was my sort of initial foray into the business, which was sort of more public side asset management of existing, a bit of development in there, to pure development at a group called Carterra. And so I spent about 7 years at Carterra building industrial, office, retail, and a bit of multi-residential condo and rental buildings there. I've since moved to One and decided to focus purely on the industrial space. And it's been an exciting space to operate in, and just focus on, as a singular focus, as it's been a pretty great run over the last, call it 5 to 10 years in the space, and even more so in the last 3 years. I mean, you spoke a little bit about some headwinds that are on the horizon with some of those, rising interest rates, and the investment climate's becoming a little softer than it was. We still see a ton of opportunity in the industrial space, and we're excited about it. And I think it really just comes down to, buying right. I think there's good assets in an up market, and there's good assets in a down market, and you just want to make sure that you're talking about the fundamentals, right? And you're thinking about, what if this building that we're buying with a tenant goes vacant tomorrow? Is this good real estate at the end of the day? And if it is, that means that your ability to release it to a new user, to many different users, to different people, different companies that are resilient, that will help us build up that cash flow again. That's really the focus. And so I think right now what we're seeing is a market that's in flux a little bit in the last 3 months with some of the interest rate increases. And we're really focused on, we continue to see the leasing market in Toronto be extremely strong, even in this uncertain market, especially in the big box space. But the investment climate is definitely cooling a little bit, and we're seeing that in valuations across assets that we're pursuing, and so it'll come down to kind of just being really strong in your convictions when you're looking at new investment opportunities, and that's kind of where my head's at from a strategy perspective.
Yeah, and I want to jump into that some more. And I'm really glad that you brought up the point of looking at a building that if the tenant were to leave at some point, what is the underlying value of the asset? And I think far too many people, especially those new into the industry, take that approach that they look at a building and perhaps it has a 5-year tenant in there. Maybe the tenant's even been in there for 15 years before, and they think that they're buying an annuity, that cash flow is just going to go on forever. When in reality, all tenants are going to leave eventually. Like, no tenant is going to stay in the building. They could stay there for 50 years. They could stay there for 1 year, but all tenants are eventually going to leave the building. So you really need to have a firm understanding of what the value of the property is before just looking at it through the lens of you're going to have that cash flow forever. So I think that's a really good spot to jump into on what makes a good building. So if you believe, and I don't want to put words in your mouth, but that's kind of been my philosophy, is that I always look at a property that eventually the tenant is going to leave. So you have to have an understanding of, like you said, is it a good property? Are you going to be able to release it? So diving into that even deeper, what makes a good property? And two-part question. I love doing two-part questions for some reason. I always get this idea in my mind and then it adds something on. So two-part question. What makes a good property?
Challenge me. Yeah.
Yeah. What makes a good property? And then the corollary of that is what makes a property that could be have major concerns about it?
Yeah, no, I think that's a great question. I think that at the end of the day, we own a wide variety of different types of real estate. On the industrial side, we own some older generation product that has lower clear height, call it between 18 and 22 foot clear, and that just is the measurement of the height of the interior of the building that you can rack up to from the actual floor of the building. And then the brand new facilities that we are developing today on a speculative basis without tenants are generally in Toronto 40 foot clear. there's even groups and there's buildings and developers in the US and even across Canada building higher than 40 foot, but let's just call 40 foot the standard for a new speculative building. So that's one thing is clear height, and there's a lot of differing opinions on that. You've slowly started to see clear heights increase over the years. Probably in 2000, you were seeing 32 as the new clear height, and in the 1990s it was probably 24 to 28 foot clear, and it's just started getting higher as racking technologies and picking technologies to get goods have improved. And we've seen a lot of our tenants and a lot of tenants who operate in brand new industrial buildings invest in great technologies that allow them to operate in higher buildings. So that is really number one in terms of new development versus older generation product is the clear height and how high you can rack within a facility. The other thing is loading bays. So there's two types. Generally, there's two types of loading bays in industrial buildings. There's drive-in doors, which you'd like to have one or two in a building, and then you have truck level doors where your 18 footers trucks would come up and back up to and either bring goods from the facility or bring goods to the facility. So having adequate number of dock level doors and a few drive-in doors in your facility will ensure that if your current tenant in the building were to leave, you'd be able to find a new tenant in the distribution space who would require good shipping, unloading, and that kind of thing in the facility. In terms of brand new facilities, we are building not just high to 40 foot clear, but we're building pretty wide bay widths and depths, and that is what the brand new third party logistics providers and warehousing operators want to enable them to use the space as efficiently as possible. And make sure that their racking, isn't encumbered by columns in the middle of the facility, which can get in the way of how they operate and move goods throughout the facility. So those are two big things kind of inside is height, width, and depth, and how people operate within the space. Outside of the facility, truck movement patterns are extremely important. Mm-hmm. So can you access the site with a truck through one point of egress, or is there another point of egress? Can you separate car traffic from truck traffic on the site? Can you drive around the building? Is there multiple ways to exit the building, or is there a pinch point at the point of entry and point of exit? That's super important for users, and that's a big thing when you're looking at a site that hasn't been developed is how would we lay out a building here? We all want to maximize site coverage in terms of our development, but not at the, you don't want to maximize site coverage to the detriment of your how you move around the site and how users are going to operate around the site. So that's another big thing that we think about when we're looking at new development or buying existing facilities. The last thing I'll note, and in Toronto, it's an extremely important thing to certain users is trailer stalls. Trailer stalls are useful to certain users, but they're not necessarily valued to others. But when there's a user that needs extra trailer parking stalls on site, it's really tough to find them. They're in very high demand, and the vacancy rate for that type of stall for these 18-wheelers that aren't moving, they just want to leave an actual truck there, is extremely important to the right users. So Yeah, I think that gives you a pretty good sense of kind of the difference between the older generation product and what we would develop brand new, and what we would kind of look to develop and make sure that we own in the event that a building goes vacant, or that we're leasing it up for the first time.
Yeah, that's very well said. And a couple things came to mind as you're going through that. The one being site coverage and the ratio that you have between the building and the land. You're trying to maximize the amount that you can put on that land from a building standpoint, but the trade-off is that some of these companies need truck storage. So if you maximize the amount of building that you have on there, you might not have enough for yard storage. I want to get your sense on the coming wave of electrification of these semi trucks, and it's coming faster than I probably would have thought. I think that there's 8 or 9 major companies that are all developing electric semi trucks, and with that, I read a spec on it the other day that the time to charge these vehicles can be anywhere as short as an hour up to 3 hours in some case. So almost by necessity, these vehicles are going to have to be parked for some period of time. And it's not coming anytime immediately, but I think that this will come in the next 5 to 10 years in a pretty big wave. What happens to these older buildings that just don't have the capacity to allow vehicles to park to be charged for 2 or 3 hours? Does that become another sense of like functional obsolescence on an older building that has no storage versus one that can accommodate that?
Yeah, no, I think that's a great point. On the sustainability side of things, like I'm seeing it. I haven't seen the electrification of trucks really start to move into the industry. You're starting to hear people talk about it, right?
Mm-hmm.
But I'm seeing it on personal automobile ownership, and in my group of people I work with, and my friends. You're starting to see it become not the standard, but it certainly is moving that way. So I think from a building perspective, leaving those additional spaces for automobile charging stations, we've already moved in that direction. Every brand new building has an automobile parking station, charging station. So what's the next step? All these trucks that operate are going to need that additional space in the yard to operate. And if you don't have trailer stalls to use towards that use, you are going to have to ghost them in on truck level doors. And that means you lose the operation of a few truck level doors. And so if you're starting off with an older building that has a low truck door ratio, and then you're using 2 or 3 in the building to charge to charge your electric vehicle for an hour or 2, then you're losing functionality of that of those doors, and then efficiency is king in the user space for us, right? Everything's built with the millisecond in mind, right? How do we make this as efficient as possible? And we develop these buildings and the interior of the buildings, the exterior of the buildings, to ensure that trucks can move efficiently throughout the space, and the people who work in these buildings can operate safely and efficiently within the space. You talk about electrification, and what I'm thinking about, with respect to our portfolio, which is a big part of our next move, we're starting to look at net zero carbon for one of our buildings, which is a 500,000 square foot spec build up in Caledon, Ontario. And this will be the first building in our portfolio that we're looking to go net zero carbon. I'm certainly not the expert on this, but what it basically means in a nutshell is we're trying to make the building run as efficiently as possible. So it'll be more airtight than it ever was. The air quality within the facility will be a lot better than it was before in previous designs. The R values on the roof and on the walls will be better, which basically just means in the summer it will deflect heat, and in the winter it will hold the heat in. And on the electrification front, there's different levels of how these buildings will be powered. And part of that is we're building the structures stronger so that we can accommodate solar PV installations on the roof. And that's, if you want to go and build carbon net zero today, number one thing you have to commit to is building solar on the roof. So we're very excited to be at the forefront of that at one. And it's I think we're just sort of at the early stages of that sustainability focus, and very excited that within the industrial space we can sort of participate in that sea change that we're seeing in the market.
Yeah, and I agree with you. There's certainly a trend towards that more environmentally sensitive building, not just from a construction standpoint, but from the operations of it as well. What's driving the decision to commit to a carbon neutral building? Is that like a company initiative where you feel that if you build it, they will come, companies will see that? Or are you already seeing the demand from tenants saying we want more environmentally sustainable buildings?
It's a very good question, because traditionally, and we don't necessarily have benchmarks for past for tenancies that require it, right? I've built to LEED standard before, to the LEED Gold standard in facilities that I've developed in the past. And it certainly is important to certain users, and to others they say, give me the cheapest building, and we're not going to necessarily pay you more because you are investing a significant amount more money in getting this standard. Now, so I think as a developer, as an asset manager, when we represent our clients, we have to be aware that this is an investment in the real estate, and it could also help us retain and bring the best quality tenants to our buildings. You are seeing ESG be such a focus for all of the major companies across the world. That is going to become such an important aspect of how we operate and be good corporate citizens. And sustainability is just a small portion of that. But it is something that we're going to start to measure, and we're going to start to speak about in a different way when we can measure where we were 10 years ago to where we are today, and if we can help build industrial real estate that is in a position to attract and retain the best tenants, it will mean that our occupancy rates remain higher, and that we don't need to spend as much money in 10 to 15 years, if and when these tenants leave, because they will be built to a better standard. The other thing is that the operating costs will be lower on some of these carbon net zero buildings. We don't know exactly how much lower they will be today, but they will be more competitive. And when we're talking about logistics providers that measure everything to the cent, giving yourself the best opportunity to be competitive in this market is extremely important, and that's really what's driving the move to our company-wide focus on sustainability.
Yeah, you guys are definitely leaders in this space, and I couldn't agree with you more. Like, the conversations that I have from doing this podcast, for one thing, and talking to people literally all over the world, to just talking to different tenants and different developers, ESG is coming in a tidal wave. That is a conversation that's happening at every boardroom level, and how we can devote more to that ESG. So it might seem like it's early days, but it's coming fast. And even beyond the ESG standpoint of it, I'm really diving into the solar panel space more, because, and we kind of address this as well, You've got companies that will have electric vehicles at some point down the road. It might not be tomorrow, but it will be some point down the road. And then even to the earlier point you made about ceiling heights, with companies developing this advanced racking technology, all of this is going to require more power. Like, the companies going forward are going to have significantly more power demand than companies that 10 years ago, they just had trucks come in and drop stuff off. And it might have been as simple as just having enough power to make sure you power your lights and some basic stuff. Now the automation, the electrification, it's going to be heavy power demands. So I think having solar on the roof, even if you just take off like the ESG hat for a moment, and I don't want to diminish it because it is very important right now, but even if you just take that off and look at it from an economic standpoint, if your building doesn't have enough power compared to one that was built with that in mind, your options are to try to see if you can get more from the power company, and that can be prohibitively expensive, or you might be able to supplement it with solar. But then issues come up with that. Is the roof structure sound enough? Was it designed to accommodate the extra weight that comes with it? So these are all challenges that I find really fascinating going forward on that. So thanks for diving into that. I had a couple questions actually that when you were talking about some of the key features for the doors and the door ratio. I know that every building is going to be a little bit different from a shape and dimension standpoint, but have you seen a good ratio on how many doors you want to have per 1,000 square feet, or just on general what a good amount is?
Sure. So it all kind of depends on how your site's laid out, right? If you have a longer, skinnier building that's not as deep, then it's easier to get more truck, like a lower ratio. So we used to develop big box buildings to a one to, call it 7,500 square foot, one door per 7,500. And in some of the brand new buildings that we're building to, that is coming down to under 5,000 square feet. So one door per 4,800 square feet. And that's generally, every site's a little bit different and every site lays out a bit different, but it's somewhere in between that. And in some of the older generation buildings, the doctor ratios are much higher. You'd have one per 20,000 square feet kind of thing. But on the brand new facilities, I'd say that would be the standard. And I wanted to touch on a little bit more just before we jump off the electrification piece, because it is going to become so much more important in terms of how we operate within these facilities, and the power required as electrification of these buildings become more and more prevalent. We are seeing our tenants and a few tenants in particular try to maximize their operational efficiency within these structures, and so they're building conveyor systems, which use lots of power. They are using systems that don't even have aisles. So they are building 30,000 square foot racking systems that use every available cubic foot, and then they have operating robots on top of that system that pick from the racking system, and the racking system moves in a three-dimensional manner.
Wow.
So there's systems that are going to absolutely revolutionize the way that we operate, not we, but our tenants operate in these facilities. And to your earlier point, there's going to be more and more requirement for power within these facilities. And so if we can do our part from a landlord perspective to help lighten the load on the tenancy, by bringing some of that power and not relying on the grid as much, then it's only going to help, as we say, our tenants who are operating within the facilities, and us as managers of the real estate. So that was just something I wanted to kind of touch on before we moved along.
Yeah, a survey just came out from CB, and they surveyed a number of different warehousing and logistics clients. And I didn't dive into like what the profile and how big they were, where they were located, but it was a survey of occupiers. And the three most important features that this survey group said that they were looking for in a new space: ceiling height, as you mentioned, the amount of bay doors or dock doors, and third, which I found a little surprising, was power. And that wouldn't have been the case 5 or 10 years ago. That wouldn't have ranked that high up there. But just like you said, conveyor belts, these automation systems. Like you see videos of an Amazon facility right now where they have all these little robots that are going and plucking pallets and they're bringing it back. And like I would think that the factory of the future is going to look a lot different, where there might be very few people actually working in them, at least on the bigger scale. I think that like the average size medium company is still going to have a demand for it, but I have to think that these large companies like Amazon, if the amount of money that they're developing in a technology, is just going to require so much more power. So I think that will be a major trend going forward.
I agree, and you know the question always comes up, you know, when we as the developer are trying to sell the, you know, a municipality on the jobs that this type of facility will bring, will bring them, and how it will contribute to the tax base. And the thing that I see, you know, that is surprising to me is that these facilities, when you go in and see them operating, there's still, even if they're mechanized, and even if they have, you know, they have conveyors, they still rely on a ton of human labor.
Mm-hmm.
And I think that's key, that we still need to look at how many automobile stalls we build, how many charging stations for cars that we're building is becoming more and more important, and how close we are to public transit with many of these facilities. That's extremely important, because these buildings aren't mechanized fully. They have mechanization within them, but they are still, you know, very reliant on human labor, which I think is great for the communities that we operate in. Right? We don't want to just operate as a fully mechanized facility. I think if we can contribute to the tax base, and if we can help you know, grow jobs and reduce unemployment, that's a key aspect of what we want to do as well.
Yeah, and even just on that thought, and I agree with you wholeheartedly. I don't think employees are going to be displaced. If anything, I think the jobs might just shift. Instead of having like some more of those manual workers, I think it might evolve to there's more people needed for software or just maintenance on this machinery or quality control. So I think it might shift to some extent, but I agree. I can't see a factory that's just working with nobody in it, or a warehouse with nobody in it. I think you're still going to need a lot of oversight to keep the machine, figuratively speaking, running. So I agree with you wholeheartedly.
For sure. No, I hear you there. I think it's like any time where you have new technologies that are being brought into a space that's been operated in a certain way for so long. You know, it's kind of an exciting time in the industry where you know, the growth within the industry is fueling these new technologies, and it's an exciting time, you know, to be a part of it, because you can kind of see it and see things change so quickly. So yeah, that's an exciting part of the business for me.
One more question before we shift, just to get your thoughts on current state of the economy, and you touched on it earlier with some of the strategy, but I want to dive into a bit deeper. But one question, just in the building itself, I think it was fourth or fifth on the same CB survey, and you did mention it as well, as just the column spacing or the column grid. So some of those older industrial properties might be like 40 feet on center. What are you seeing right now for modern buildings for that column grid?
Yeah, so you'll always have a brand new facility built with a loading bay that's deeper than the rest of the bays within the facility, and that is now, call it 60 to 70 feet deep, and then the width of every bay within the facility will be call it 50 to 60 feet. And we're seeing, it depends on the specific user, but, to your point, if the older generation buildings were 40, the new generation facilities want to be closer to 60. Mm-hmm. And 56 to 60 is kind of where we're seeing as a point where most users will find that works for them. If we're not building a design build structure for a specific user, that's what we'll build on spec to allow it to fit the most amount of users possible.
So we could shift to look at more of like a macro level, either economic or even just more specifically for industrial real estate.
Sure.
What are you guys expecting here as we round out 2022 going into 2023?
Yeah. So, I touched on this a little bit at the start. We're obviously in a inflationary environment right now after a long run of very cheap debt. And so that has been a shock to the system that we've seen, over the past 6 months, and it's affecting, everyone in different ways, right? It's affecting, it's affecting real estate owners, it's affecting our tenants, and it's affecting you and me, right? Like, and so the challenge that we're going to see over the next, 12 to 18 months, first of all, is our consumers going to come back and spend money. And Black Friday is tomorrow. Our consumers going to come out and spend money, or is more of their income tied up in their real estate and tied up in their mortgage payments? So that's going to be an interesting thing. Just, if I'm looking macro, but thinking down at a personal level, I think that's going to be a very interesting thing to see how our economy reacts over the next few months. If I shift gears and talk about the, how it affects the industrial space, we've seen in Toronto a historic 3-month run of leasing in our market in the industrial space. And so while it was a slow summer, we're really seeing deals get done in the industrial space, and our vacancy level with all the new deliveries that are coming out, everything gets leased up, like in most cases before it's substantially complete. So I remember back, 8 years ago, I used to attend a whole lot of, and we used to host a lot of broker events at our buildings when they were complete. It's very uncommon to get invited or to host those events anymore, because 70% of the buildings that have been delivered in Toronto over the past 3 to 4 years were leased up before they were substantially complete. So that is something that I could change, and it can change on a dime very quickly. Mm-hmm. But for now, the market remains resilient, and industrial real estate is remaining resilient from a user perspective. There are still tenants who need space, and our vacancy level still remains at 0.5% historic lows. Now, shifting gears, there's a bit of a dichotomy within the market. The investment climate is cooling. It's not as strong as it was 3 or 6 months ago. There are less bidders at the table for opportunities. The interest rate environment is leading to investors needing a bit higher of a return on their investments. So it means that there's just that's led to a decrease in valuation across a number of different portfolios and individual assets. So there still are opportunities out there, and we should keep in mind that the market might have come down slightly in the last, and it's a big number on a percentage basis if you look at where we were 6 months ago. But if you look at where we were 5 years ago, we've been on this historic run. So it is we need to sometimes take that 30,000 foot view and look at where we've come from, and not just the last 12 months. And so that can be an important kind of way that we strategize and look at where we're at. And then it really just comes down to, how do we roll that into our strategy? And as I said earlier, the fundamentals of the real estate are paramount, right? Because we, as you mentioned, want our buildings when they're fully leased to be a 10 to 15 year annuity, and we want the tenant to renew at market rates when they're ready to renew. But if they don't, you want the fundamentals of your real estate to be fantastic, so that you can release them to a new tenant if they were to leave. So I think we're really just, we are being careful about our investment thesis today. We are looking at more existing buildings. We've got lots of development land in our portfolio that we're continuing to move forward with, but we're definitely, in a time where there's a bit of uncertainty. There remains lots of opportunities. You just have to make sure that the fundamentals of any deal or building are there before you put your money into it.
Yeah, very well said. And I completely echo that, is that very few real estate investors or developers think with a 1 or 2 year horizon. So if we do go into a little bit of a economic downturn, and headwinds, it seems to be the word that everybody defaults to, is that there's headwinds out there. If that's the case, then that's possible. But if you're taking a longer term outlook, if you're buying right or developing the right product, and you've got that investment thesis that things are going to be better in a year or two than they are right now, I completely agree. Is that it's a long-term approach versus trying to day trade real estate, which is, I don't know anybody that's successfully day trading real estate, at least at the industrial level. And I always find it peculiar when, and the media is experts at this, they'll say this stock just dropped 15%, and that's the headline that they use. But the backstory is it might have went up 100%. So in context, it doesn't look nearly as bad, but they love these headlines of saying the market's just dropped X amount, when in reality, if it's still gone up tremendously and it's had a pullback, that's probably healthy, because any market that continues going up at that pace is also unhealthy. So I agree with you. I think that there could be things there. And there's other investments, even outside of real estate, which seem very speculative right now, and there's risk associated with that. And I'm sure some of those people have had sleepless nights seeing the volatility in their asset class. Looking at industrial, and the quick answer from you might be no, but is there anything that keeps you up at night? Anything that worries you about the next, and it can be short term, it can be in the next 6 months, if interest rates keep going up another 200-300 basis points, that's a concern. Or it could just be something that a shift in consumer sentiment, where maybe there is a return back to more bricks and mortar, and that slows the growth. Anything that kind of just a little bit back of your mind that causes you a bit of worry?
Yeah, I mean, I think I'm certainly, I'd say 10 years ago I was a lot more of a doomsday worrier, but I think about I think about smaller things, individual challenges within our existing portfolio. I think about I think about how we're designing our new developments, and when we're trying to get sites entitled, I really get into the weeds on how we're going to get to where we want to go. Right, we're at this point today. We've assembled a team. How are we going to get this building built, and how are we going to get it leased up and operational at the end of the day? So I think from an economic standpoint, I'm not overly concerned about, certainly there's going to be some headwinds, as you said, over the next, 12, 18, 24 months. We all know that's going to be the reality. I'm hopeful that it's, short-lived, and we see some interest rate increases by the Bank of Canada over the next, month. And then 2023 is a stable interest rate environment. And then we all hope it comes back down in 2024. And that seems to be the company line on that. I think as a Canadian economy, we're in a good spot. We're investing for the long term. So what keeps me up at night are the little details on our developments and how we can, work together as a team to make sure that we are building these developments and we're managing these assets with the fundamentals in mind.
Yeah, great answer on that. You said a little bit about your background on how you've worked in different asset classes, and just kind of like on a personal side, I'm sure when you were talking to friends or family and you're describing what you did, you could say you're working like in office and retail, and people are like, okay, I get that. I've been in an office, I've been in a shopping mall, I understand that. What would they say when you talked about industrial, and what has been the evolution of that from 10 years ago when you said that you worked in industrial real estate to today? Has there been any shift in what your friends and family think about the industry or even know about the industry?
Yeah, no, that's a great question. I think that when I got into industrial, it certainly wasn't the sexy asset class, right? And it wasn't the asset class where people had a good understanding of what operated in these facilities, right? And now, I think the pandemic has accelerated everyone's understanding of how goods get to your home if you don't go out and buy them at a grocery store, or if you don't go out and buy them from a bricks and mortar retail. So there's generally a better cultural understanding of why industrial warehousing, logistics, and assembly manufacturing uses are important to our society and to our economy. So that wasn't there 10 years ago. When I got into the industry, to be honest, it wasn't my choice to jump into the industrial space, because I would have thought that the retail and the residential space would have been a lot more exciting. It's something that I had a better understanding of. But I think I've been lucky in that I've been given an opportunity in the industrial world that's allowed me to kind of to learn about this little part of our Canadian real estate market, and really focus and learn about what makes this tick on our little sort of corner of the globe here.
Yeah, I share a similar story. I got into it accidentally as well. I was thinking office towers, big shopping malls would be like that sexy asset class, and stumbled into industrial, and just very glad that I did, because for all the reasons you said, it's unique, it's different. You get to see things being made, you get to see the grease of the cog of the commerce, right? You get to see all of this stuff happen, and I've found it completely fascinating as well.
I agree. Yeah, like getting to walk through these tenant spaces and how they operate. And we talk a lot about distribution uses, but we also have tenants who have operated printing presses in their facilities, and that certainly is a business that will be challenged over the next little bit. But we operate out in Edmonton, where you are. We have a hockey rink and a training facility in one of our industrial buildings. So that's really what makes these industrial buildings resilient. Is at the end of the day, they are cubic boxes that can house a whole lot of different users and uses within them, right? And so that's really what's made this asset class resilient, and I think we'll continue to make it resilient in the coming years.
Yeah, completely agree. So what are you guys excited about? Like, what do you got in the pipeline right now? What do you have got coming into 2023 for big projects?
Yeah, so we've got about 2.5 million square feet of new development in the pipeline. We've got two projects in Toronto, totaling, call it 600,000 square feet of brand new logistics space. And so one of those buildings will be delivering in April of next year, and the other one will be midway through 2024. We've got the building, Caledon Industrial Park up in Caledon that will be built to that net zero standard. That's going to be a single load 530,000 square foot facility, which it's probably on a mid 2024 delivery as well. And then we've got some bigger land plays in west of Toronto in some smaller markets that we're excited to kind of move through the entitlement process and get and take through sort of plan a subdivision and get those up and running. So lots on our existing kind of development ledger and lots in the pipeline, and then on the income producing side, we have about 5 million square feet of existing product that we manage on behalf of our clients, and so we we're managing that on a day-to-day basis and trying to build that with the development program.
Cool. Well, I'm a big fan of your company and big fan of the local team, especially. It's you guys put together an amazing product, and I really do want to thank you for just spending an hour with me and sharing your insights into this, because I love talking industrial, and I always love hearing things of areas where I might not have the full picture. So I really do appreciate it. I feel like I learned some things just having a chat with you. So I really do appreciate you taking the time to do this.
Great, Chad. No, I've enjoyed our chat, and thanks for making time for me today. And yeah, look forward to connecting next time I'm out in Edmonton.
Well, and likewise, if I'm in Toronto, I'll definitely reach out in advance, and I'll put your contact information, your LinkedIn and one's website in the description. Any other way that people can reach out to you if they had a question or just wanted to touch base?
Yeah, on the website, there's my contact is on there, and welcome. Anyone who wants to talk about real estate or any of our projects. We've got lots in the pipeline, and we're certainly excited about bringing them to market. And so, yeah, appreciate that opportunity.
Awesome. I'll put your the link to your specific profile on one's property website as well, so people just can have a quick shortcut there.
Great. Appreciate it, Chad. Have a great day.
Yeah, thanks, Jamie. Really, thanks again, and we'll definitely be in touch.
Bye.
Okay, take care.